if I show you 3 different time frames and don't show you the title, will you be able to tell me what time frame it is? Well, let's see. Here's A. What time frame is this? Right? Hey, what time frame is this? It's hard to tell, right? Because at the end of the day, the price chart is just made up of the buyers and sellers, right? You just got, most people are using Japanese candlesticks, all right? And so if you take the title off, you really can't tell what time frame you're on. So that leads me to the next question. How do we choose a time frame? And in this video, we're going to discuss how you can choose the best time frame for you. Let's go deeper. Hey guys, JD here. So hey, at the end of the day, you actually have to pick the right time frame for you. And I get this question all the time because, everybody's like, what time frame is that? Because they really feel like the time frame is like magic, but it's not. But what I will say is I do not use time frames. I don't know if that's correct, but I don't use time frames in the futures market. I use tick charts. All right. So instead of being on a 15-minute chart, hour chart, day chart, I use tick charts. So this is probably going to surprise you. Maybe it won't. If we're talking futures, I use tick charts because everything is based on a tick in futures. One tick on an ES mini contract is $12.50 a tick. All right. If you're trying to set your stop loss and your ATM strategy, it's based on ticks. All right. So me personally, I don't use timed time frames in the futures market because the whole futures market is based around ticks. And so I use a tick chart. And one major benefit is that, let's say I use 1,000 tick chart. Well, what that means is that every 1,000 contracts that's bought or sold will produce a new candle. That allows me to visually see the momentum in the market, even if I don't have any kind of, volume indicators going or volume tools going. Just being able to see how quick a candle developed. I'm like, how fast did that candle print to the screen? That allows me to see the volume. I can look and say, how big is that candle? Where would I have to put my stop? All that again allows me to see, the volume, because if the candle was real huge and it happened real fast and that much volume came into the market to give you a big old candle on 1,000 tick chart, who's moving the market, right? You know which way the market is about to go. So personally, I don't use time tick chart. Sorry, but I do use tick charts. And, again, like I said at the beginning, you have to pick the right tick chart for you. You have to pick the right time frame for you. Like, for instance, a lot of you just saw the video I did with my father who recently got funded, and he knows nothing but what I've taught him. Okay. But he's on a higher tick chart than me, because that's the tick chart that works for him. All right. And if you want to learn more about my father's story, so many people comment and responded, I did create a new case study just to show his journey. All right. So if you want to see my father's journey to become a funded trader, just comment below, give me the case study. All right. And I'll send that over to you. But what he found out is that the time frame that I traded on was too fast. So let's talk about what's the real difference. And let's just say a 3,000 tick chart and 1,000 tick chart. All right, let's go to the board to show this part. So here's the thing that people kind of don't understand when we're talking tick charts or charts in general, because this actually maintains whether we're talking a day chart, an hour chart, a time chart, whatever kind of chart. When we talk 3,000 tick chart, we got a 3,000 tick, 2,000 tick. Let's make it a T or something. We got a 3,000 tick, 2,000 tick, and a 1,000 tick chart. What is really the difference, right? What's the difference? Here's what people don't realize and why you should take this into consideration when you're trying to pick what time frame you want to trade from. The real difference, and I've already discussed that price action happens on all of these. Just look, trend down, trend break, retest to new low. That's price action. Right now we're on 1,000 tick chart. All right, let me show you something. Here. I can get this out the way. Okay, let's move it over here. Let me show you something real quick. That's the 1,000 tick chart. Let's go to 2,000 real quick. Let me erase that last joint. Okay, and I'm gonna put it right back. Look, y'all, deja vu. All right, trend down, trend break, retest the new low. All right, so that's on the 2,000 tick chart. Let me go back one. Now let's go to a 3,000 tick chart. Okay, a little harder to see. Actually, it's still another one right here. Just look, trend down, trend break, retest the new low. All right, so as we can see, right, price action is happening on all three charts, right? I clearly see a trend down, trend break, retest the new low. It's happening on all three charts. So what's the difference? The difference is the fact that down here, like I said, every 3,000 contracts bought or sold will make this candle. All right. So the bottom line is it takes longer for 3,000 transactions to take place than 1,000 transactions to take place. So what does that mean? What that really means for the trader is that you can look at it like this. The 3T out of these three is going to be the slowest. All right. It's going to move the slowest because it takes 3,000 contracts to make one candle. So it's just going to move slower than a 2,000. So this is going to be slow. You know, this is going to be slower. Well, 3T is going to be slower. Actually, I did that wrong. 3T is going to be the slowest. This is going to be slow. Let's just say this is slow. All right. Some people think this is fast. So this is what my father figured out. What my father figured out is that he traded great on a 3,000 tick chart. But when he tried to drop down to the 1,000 tick chart, it was just too fast for him. All right. So you may be making a decision, you know, based on what your mentor does or some training you saw. But 1,000 tick chart just may be too fast for you. Like in the case of my father, it was just too fast, but he murdered on the 3,000 tick chart. Okay. So you have to figure out what's going to be best for you. And it's truly usually based on speed, right? If you're on a 1 minute, a 5 minute, you know, something crazy, a 60 second or something, the difference in each of these, price action is going to be on every one of these charts. The difference is the speed, okay? The difference is the speed. And so what you want to do is experiment, right? You actually have to experiment, all right? So at this point, I mean, you may, now that you know that if you're in futures, you may want to look at a tick chart. You still can find the same price action with regular candles. But again, I say futures is just designed for ticks. I mean, it's all designed under ticks. So why not use a tick chart? But the main difference you're going to find, and you can experiment with other times. You can try a 5,000 tick. You can try a 1,500 tick. You can try a 2,500 tick. You have to just find your happy medium. You have to find a chart that's moving at a pace where you can make sound decisions. You don't feel rushed. You can see the trade coming a mile away, and you can move accordingly. That's what you want. You don't want to be in a situation where you're on a chart that is so fast, you just can't keep up, right? And if you're trading a 1 minute chart or below, it's going to be fast, right? A 5 minute chart is going to move way faster, have way more entries than a day chart or a week chart, right? The only difference in the price action is how fast the price action is popping up, all right? So when choosing a time frame, remember that it's about the speed of the chart. No chart on its own is just going to make you profitable. It has to match your strategy. It has to match your trading plan. It has to match your personal trading identity, right? And then when it all comes together, now you're saying you have a system, but you have to find your happy time frame, or you have to find, I would say, you need to find your happy tick chart, all right? Because when you find it, and it's just going to take experiment. I mean, it didn't take my father long at all to know that 1,000 wasn't for him. It didn't take him long at all, right? So go on demo, experiment with different time frames, and just find the one, that's for you. But again, But again, hey, my dad had a great story. If you want to hear his story and completely written out, I took the time to make a case study for it because I think it's so encouraging to people. He's 79 years old. So if you want that case study, just comment below, give me the case study. All right. And so one last thing I want to talk about though, the difference in charts. So I told you that the 3T is slowest, the 2T is slowest, the 1T is slowest. But why would you want to trade? Let me clear some of this out now. So the question is, why would you want to trade one over the other? And I'll tell you why. What I found out is that, again, I was saying that I don't know why that won't erase. Again, I was saying that, you know, it takes 3,000, right? It takes 3,000 contracts to make one candle. What I found is that on a 3,000 tick chart, let me see if I can see how big this candle is. Let's see. Let's just look at this last candle here. This candle here, the whole range of this candle was from 88 up to 94. I mean, that's a 6-point candle, right? So let's say we were going to use this candle as our entry candle. So if we entered right here, we had to put our stop under the candle. That's 6 points back. Well, you know, that's high. I normally like a 5-point, you know, risk. So I would need 6 here. What I found out that if I was to flip to 1,000 tick chart, let's just see. Let's see. If I was flip to 1,000 tick chart, it's hard to say which candle it would be that same one, but let's just look at this situation here. If I use this as my entry right here at 80, I would need to put it here at 77. That's only 3 points. Do you see the difference? What I found out to me is that on a lower time frame, you can have a tighter stop loss, right? So many times I can get away with a 2.5 to 5 point stop on 1,000 tick chart, where on a 3,000 chart, I need 5 easy. I need 5 to maybe 10 points, okay? So the 1,000 tick chart is faster, but the benefit is it offers a better stop loss possibility, all right? Your stop loss can be smaller. You know, it could be 2.5, you know, to 5 points easily on a 5,000 tick chart compared to a 3,000. As we just saw, you're gonna need 6, you know what I'm saying? You're gonna need 6 to 10 points. That's a big major difference right there, all right? And it's gonna be like that on other charts too. If your stop loss on a 1-minute chart should be a lot tighter than a day chart. So this is why people do top down in the first place, right? So this is why people do that top down analysis where they may start on a day chart, move down to a 4-hour chart, then they trying to take the trade on a 5-minute, because you get a better entry, you get a better stop loss, right? So again, you have to find your happy medium. You have to find the exact tick chart, right? That's not too fast, but also gives you the possibility to have good solid entries. And you know, it just takes takes some time. It takes experience, practice. You just got to get in there and do it, right? Figure it out, just like my dad did. I'm trying to tell y'all want to see this case study, man, because I cover everything in it, from his size that he was trading, the account that he was trading, the prop firm he used, right? How many points he was risking, his targets, his trade management. Everything's in this case study, y'all. Y'all want to get it? Comment below. Give me the case study. All right. So that's it, guys. That's it. That's gonna wrap it up for this one. I got an example for you today. It's real short trade, but again, I'm gonna harp on this all year, that the key to price action trading is understanding the market cycle. Trend down, trend break, retest new low, or trend up, trend break, retest a new high. I had a perfect trend down, trend break, retest a new low. I knew the market cycle was over. I was looking for the reversal. When it came, I took it without hesitation, and you'll see the end result of that. All right, so let's roll that and then we'll come back. Hey guys, how's it going? JD here. So we have had 2 huge legs down. You see, I had the measure leg here and we overshot that. So I knew the reversal was coming, and so I entered right here, kind of on a push down. First entry push down, second entry long, you know, expecting a reversal. So we got a good trade going so far. I mean, the top could be probably the bottom of this range here. So long ways up. So we're gonna see if we make it. Push up, break higher, break higher, break higher, break higher, push, push, push. Okay, we're gonna have to lock in tight now, simply because we were down. So we're gonna lock in tight behind this breakout. And hopefully this trend will continue. Oh yeah, oh yeah, we done caught one now. We done caught one now. Let me lock in here. We just stay behind these swings. Oh,
Stop, Phil.
good trade, great trade. So I hope you enjoyed that trade example. Hey, listen, don't just go with what somebody else is doing. All right, do some experiment. Find the right time frame that fits your strategy, your personality, your risk management, and your trading plan, and everything else will take care of itself. And if you want to see that video where I did the interview where my father talked about becoming a funded trader for the first time, check it out right here. Until next time, my name is JD, and as always, I wish you increase on the sudden. Bye-bye.